Welcome back to Fast Market on the Schwab Network. I'm Diane Kinghall alongside Kevin Haynes joining from the CBOE. We've got you covered from exchange to exchange. Time now for our cash tag segment. For that, we want to bring in our next guest. That's Landon Swan, co-founder of LikeFolio. Landon, thank you so much for joining us as per usual. You've got to look across Carmax and beyond today. You often track, obviously, consumer data, trends, purchasing intent. So what are you seeing right now in terms of sentiment as it relates to Carmax?
Yeah, so I mean, Carmax is, you can't talk about them without talking about Carvana, and they used to be the innovative one. Carmax used to be sort of the innovative one. They flipped the whole used car selling and buying experience on their head, but now Carvana's kind of come in and taken that spot. And so what we've seen is, yes, they had a great quarter last quarter. I mean, their EPS was up, I think, 42% year over year. Same store sales up 8%. They're making $2,400 gross margin per unit. Doing really well as far as, quarter over quarter, year over year. But the stock is selling off. I think it's down about 25% on a 1 year basis. And meanwhile, Carmax has doubled over the last year. And you can see here, if you look at just web visits, which is a very important metric for both these companies. But it's down significantly. It's down about 13% on a year-over-year basis, with the stock down 25%. So, maybe the stock has come down a little too far, perhaps. But, we're really seeing that it's losing market share to Carvana. It's really, the consumer experience is just better with Carvana. That's what we're getting. We're getting better happiness numbers. They're making about double on their gross margin per unit. A lot of people question those numbers, but that's what they're reporting. That's what they're showing. And you can see the difference in just consumer enthusiasm around these two names. I mean, Carmax down 13%, Carvana up about 15%, and the stock reflects that, as I said. And what's really scary is if you look at what we like to call consumer mind share, like what percentage of when people think about or talk about these companies, what percentage is each one? Carmax 2 years ago was 68%. Last year was 65%. This year it's 57%. So Carvana is continually eating away and eating away. It's not going to be long before Carmax is under 50% compared to Carvana. And that's a big concern. Now, the counter argument is the PE ratio, right? I mean, you've got Carmax at, I think, 16 or so. Carvana is over 90. So it's a huge difference. I mean, there's a ton of growth priced into Carvana and not a lot of growth priced into Carmax. I mean, they're the market, I think, is expecting them to continue to lose their lead, and that's what the data is showing. So I guess it's a bit of a value play, but for me, I'd rather bet on the company that's outperforming and growing and doing things better, even if they are a little bit more expensive. So for me, Carmax is fairly priced right here, and we don't see a huge turnaround coming on this quarter.
Landon, they put up fairly good numbers, but the stock, your data, and I read 3 analyst notes on Carmax today, and 2 of them mentioned their loan portfolio. They said, I believe it's up to $16 billion, their loan portfolio, and delinquencies are starting to tick up. So not only do they have a market share and a business problem, but they're starting to get into a little loan delinquency issue as well that's probably hurting their overall profitability. So but what do you think it is, Landon? In your opinion, what is what is Carvana doing? Remember, we've talked about this many times on this show, that how does Carvana get those margins on sales? Tariffs should be favoring all these used car dealers as new cars are getting tariffed as they come over. What do you think it is that's putting Carvana so far above Carmax?
There's a business principle that says you find one thing and you do it really well, and you kind of push everything out. Now, I'm not saying that Carmax's loan operations need to go away, but it's a bit of a distraction, and they have to, it's a value add and it's a diversification of revenue. But if you're going all in on being the best at finding a used car and selling a used car, sourcing them and flipping them, that's what Carvana has decided to do. And Carmax is trying to do that while at the same time finance everybody and deal with these loans and handle the bad payments and all of that. It's a lot. And so I think Carvana has sort of honed in and made efficiency and expertise their hallmark. And so they're able to become much more efficient. They're able to have their costs a lot lower, and of course that means the margins are a lot higher. Now again, I can't explain why they've got to basically double the gross margins. They're obviously far more efficient. Carmax is getting more efficient. I mean, they introduced an AI virtual assistant that cut their service costs by 30%, a sales assistant that increased their sales productivity by 24%. So they're going in the right direction when it comes to efficiency and technology. I think Carvana just beat them there. Now, will Carmax turn that corner and change things? Obviously, I don't know, but it's interesting that Carvana did it so quickly and jumped out ahead. And Carmax is, like I said, they were the early innovator 15 years ago or so. They come in, you get a quote, you can sell your car right away, you can buy one with no hassle. Far different experience than you going to just a normal dealership. They were the innovators, but now Carvana has taken that spot, and so Carmax is playing catch up. If they can get their technology in line, if they can focus, then perhaps they can turn things around. But right now, it's a bad metaphor, but they're in the rearview mirror. And Carvana is doing everything right, and they are focusing on what they do, very simply what they do, one thing, whereas Carmax is a little bit antiquated in that approach. Now, again, it's a value question, right? PE 16, PE 90, that's huge. That's a huge, huge difference. If you think they can turn it around, then yeah, one's way more attractive. It's 4 times cheaper. So I think that's the argument for Carmax, but it's a lot easier to just bet on the fast horse with a great jockey rather than the so-so.
I love both of your analogies there, like the fast horse analogy and potentially the rear view mirror. Because, listen, when I was shopping for and debating between a new or used car this year, I looked at Carvana. Carmax ended up coming up as an option, but it was kind of like low on the list for me. It was either going to be, straight to like a normal dealer or Carvana, because I'd also Tom White, who you talk to regularly, had talked about his experience selling his car on Carvana, and he just seemed so happy with it. So to your point about the buzz, it seems like the buzz is there, and at the same time, I'm glad you brought up AI, because I was going to ask that question. How much is AI a piece of this? And it feels like Carvana has figured out the AI piece of the puzzle better than Carmax, and you wonder if Carmax is trying to do too much. What's your thought on that, Landon?
Yeah, I mean, I think they have to innovate with technology. They have to, and already they've done it, and they've gotten some really good feedback. They've gotten some good results, so they're going to continue down that path. I think that Carvana has focused more from the beginning on making it a very seamless digital process, just get you in and get you out, make it a really simple. And at that scale, if you can cut costs, that's what's going to, your margins are going to be much, much larger. That's what we're seeing. Now, Carmax is pushing their omni-channel where you can start online, finish in the store, you can do it all digitally, whatever you want to do. So they're kind of, they're moving in that same direction, but they also they're set up to be more of a come in and look around kind of operation. I mean, their stores are much larger. It's not as online as Carvana, and so it's different. I don't think that you can turn it around and get it to where Carvana is. You can do things that push technology, that increase efficiency. You can do those things, but I don't think they're ever going to get to the point where Carvana is without massive restructuring in just how they do their business, and I wouldn't recommend that. I think they got to stick in their lane. So long term, I think that Carvana continues to eat at their lead and continues to, I think they'll flip on the mind share. I think they'll get over 50% within the next year or so. And it's, Carmax is just going to be second place, and they're just going to have to be the best second place they can be. But that's just the way I see it going forward. Yeah.
All right. Well, Carmax has earnings due tomorrow. Adjusted EPS is expected to come in at $1.05. Revenue is expected to top $7 billion, which would essentially be little change year over year. Thank you, Landon. That is Landon Swan, co-founder of LikeFolio, with the latest sentiment data. All right, now.